So the first topic, it's a bit of, I'd say, it's just the basics of, say, what management accounting is, right? So learning unit 1 just explains the basics of what you're doing, right? Just to say that it's merely just separating between what a management accountant is and a financial accountant. What does management accounting entail versus what financial accounting entails? Because what you find is that it doesn't mean that just because you're an engineer, you are one thing, or just engineers in general are doing one thing. So same thing with accountants. Doesn't mean that if we say that you are an accountant, we are all doing the same thing. Others would be doing finance, like your reporting. Those are the people who are working in making sure that the financial statements are accurate and they are ready to be audited or be taken to the banks. Let's say a company wants to make a loan, they will go to a bank using their financial statements. Those financial statements would be prepared by a financial accountant, right? So they look at trial balance, all of those things that adds up to the financial statements. Then you have another different type of accountant, that's a management accountant. The management accountant, though, you'd find that they say your management reports. So it's a clear picture of a snapshot of what's happening now that helps the company to make certain decisions and help them with making price changes, pricing in terms of, let's say, we're no longer charging this, we're not, just given the fact that our accounts at the moment, they're showing that this is the money that we have and this is where we're going in terms of forecast. So management accountants, I'd say that they are more of indicating the true monthly snapshots of how the company is performing, you know? Financial accountants, it's more IFRS. What does IFRS say? Is this an asset? Is this an accrual? How do you recognize all of those and how they fit into the financial statements? Well, as management accountant, I'd say it's a snapshot of now. It helps you to make plans, forecasts, budgets, but I'll say forecasts more than budgets, and also decisions where you can make decisions now based on what's happening in the environment, right? Then there's cost accountants. Cost accountants, it's in the name. They look at cost. How are we using our costs? Are we saving money? Our process. So they look at the process of the company to say, how long does it take, for instance, if we are making a table, how long does it take for us to assemble the table? Where do we source or buy our raw materials? Do we still have to get shipment from China, or can we get our supplier who is local? Which one is cheaper? Those are the stuff that cost accountants look at. Which one is cheaper? Does it mean that China, I'm making an example by the way, with China, those shipping fees, insurance of the shipment when it comes, when the cargo arrives at the port, how will it get to us? All those necessary costs, handling the material, if it's fragile, that means that the container requires more money to make sure that your fragile shipment comes in the same way where it comes from, so that if it's glass, by the time that it comes to our factory, it's still glass, it's not broken. So all of those things, the cost accountant looks at those and then helps the company to manage costs. If it's a process, how long does it take for this labor, this type of labor with this certain skill? How long does it take for them to assemble this table? Can they use this machinery? So it's a matter of time. Time means money. So can you save? Maybe we're no longer using that individual with that type of set skills. Maybe we need someone who is highly skilled. If they are highly skilled, yes, the time that they spend will be reduced, but at what cost now? That means that we're paying a premium for bringing someone who is highly qualified for this specific job. So I'm just giving an understanding of what a cost accountant does. So that's cost accountants. Then there's tax accountants. They look at tax. Given the revenue that we make, how much are we paying to SARS? So each and every single accountant plays a certain role within the organization. They don't do the same thing. The same as management accounting, yes, there's certain principles that you get from your financial accounting. If people are doing finance, accounting within, I'm saying if you've registered for accounting, you'll see that there's certain places where we overlap. But management accounting is a bit different because, as I've mentioned, it's more decision making, what's relevant, what's happening now, how can we forecast? We are dealing with the as and when now, as opposed to accounting where we say, what does IFRS say? How do you recognize this? Stuff like that. That will lead to your balance sheet, your income statement, cash flow, the notes. That's accounting. So you will see when you do your accounting module, that's what will be required of you, the hat that you need to wear. Then when it comes to management accounting, you have a bit of cost accounting and that management that I was talking about. You look at the cost, you look at the profit, you look at the selling price. You now factor in decision making. You're looking at standard costing because standard costing helps you with forecasting. So there's so many elements within management accounting, and there's a different type of hat that you need to wear when you're doing this subject. Okay. And it's very important that the thinking part is critical because it helps you to know how to answer questions, how to approach the questions, and how to structure them. Because it's not accounting where it's just debits and credits, and you're doing your T account, and you are now putting a structure of the balance sheet. No, in this instance, you will need, it's more maths, if I could say, long story short. I still say, and I tell people, even the people who are going to write their sub, please make sure you practice these questions because management accounting, it's more like maths. Mathematics, you need to practice it almost every day. You can just say, even if it's 30 minutes, just do a question and attempt it and practice. So when I say practice, I mean, if there's a question on direct and absorbed costing, that's a topic on its own. You will need to make sure that you look at least 3 different ways that they could ask you that question of direct and absorption costing. Sometimes they ask you to put the statement of direct costing and absorption costing. Certain times they ask you to reconcile the profits between direct costing and absorption costing. Another question might ask you to discuss what's the difference between direct costing and absorption costing. So what I'm trying to say is the practice means look for different ways that a certain topic can be tested, because then you will have a certain structure or a certain way of you attempting the question. So no matter what they throw at you, you'll be able to pick up and know the principle. Don't cram the question, but understand how differently a topic can be asked, because that just all falls from one principle, but asked in different ways. Okay. So the unit 1, it's explaining that, just to say what's the difference between financial accounting and management accounting, and what does management accounting entail. So it does entail this planning and decision making that I spoke of, where you have to look at your sales, you have to look at the production, you have to look at, I did tell you, human resource. How do you guys source people? How do people actually come and work here for the betterment of the process, just to make sure that the process is seamless and it doesn't cost us that much. So even if it's in your own, I always say that management accounting helps you with your life decision making or your life budgeting monthly, just to look at those planning skills that you will attain from doing this subject, of knowing who offers quality at a low price, who's giving me, who am I paying that's giving me high prices, what am I benefiting? So it helps you to, if you understand it clearly, you can apply it in your life, you can even apply it in your own business, because at the end, yes, we are making profit, but at what cost? How am I doing my pricing in terms of sales? Who am I employing in my business? How often do they come to work? Idle time, productivity time. How long are they productive? How long are they idle? Where do I source, if you're making cake, this flour? Should I buy it in bulk where I know that I'll get discounts? It's all of those elements that you need to make sure you wear that hat, regardless of the topic. But that's how you need to think when you're doing management accounting. Okay, I summarized a bit of learning unit 1. Yeah, learning unit 1 is just an intro of saying why are you doing what you're doing and what does it entail to an account. It's a nice ease into the subject, I feel, and I like the new model that they use, because at least it gives you a bit of understanding of how companies work, different types of accountants that are there, and how to actually approach management accounting. So it's a nice intro to the subject. So with that being said, we're going to learn it unit 2. Okay, because remember, tutorials are not lectures. So I forgot to say that. Tutorials are not lectures, but they just give you a brief summary of what the topics are. Ideally, it's more of, I think, as I said, we'll get into the rhythm where you guys are now asking questions. There's a question that you have to do and you are participating. So tutorials, it's more me helping you to navigate through this model. So cost concepts, right? Purpose of this is just to outline of it. What are we trying to achieve here? We are trying to understand what's a cost of, how do we classify costs, and how does cost behave? And over and above that, we look at how can you estimate costs, right? Because sometimes we have to be, if you are in the planning stages or in the pricing strategy session, you have to now start estimating where your cost would be. So also going to look at cost estimation techniques and cost volume and profit analysis. So this one helps you to, your CVP helps you to analyze that from the profit that I have, at what cost and volumes did I need for me to make this profit. Okay. So cost definition and classification. What do you understand to be a cost object? Can you guys, okay, before we go there, yeah, before I give that, but what do you guys understand to be a cost object? What is a cost object, or do you know an example of a cost object?
Maybe cost of running a department, like cost of service, cost of product, sort of.
But what is that cost object? What, from what you mentioned, yes, what would you, or anyone in the class, what would you specify to say, this is a cost object?
A cost object is the amount we spend to produce that particular product. If we are in manufacturing, let's say it's a cost to us on what we are manufacturing.
So what you're explaining is the cost, right? So
yes.
A cost object, yeah. So you mentioning a cost. You're saying that It's the cost that we spend to make a product.
Yes.
Right? But those are costs. Those are product costs. So what is a cost object? Those what you just explained is the cost for us to produce this product. So what is a cost object?
Would I be wrong in saying that it is something that a cost can be identified with? Like the previous, I think it was Kathy who said that it's when you, it's a cost behind whatever it is that you're manufacturing.
So an object, a cost object, you're saying the same thing as Kathy in different ways. It's something where we can trace our costs, right?
Yeah, that is what I'm trying to say.
Yeah, it's what you're trying to say. So what is that something? Give me an example of that something where I can trace costs, guys. An example. This is not science, by the way. I did say explain it to me as if I'm a kid. So what is that something where I can see my costs? Where I can trace costs, that there were certain costs that were incurred for this something. What is that something? Maybe when I say cost object, it ends up being otherwise.
If it's something like, say you're making a product, then your cost object would be your raw materials, isn't it?
So a product can be something, guys. So a table is a cost object. A table, it's a cost object. Because why? When I look at the table, I can trace all the costs that we've incurred. Your raw material would be that wood, right? That is used for the table. So a cost object is something that we can identify cost. We can pick cost to. So a couch, a cell phone, a product, guys. That's
Also, it's a finished product.
But it's a cost object. It's a cost object. I can identify all the costs that were incurred for me to have this product. So a phone or a table, at the end, like I said, I see a table. It's an object that has costs on it. So what are those costs from this table? This table has wood. There was raw material cost. It has steel. There was raw material incurred. There was someone who came and assembled this table. So there's labor that was in there. Depending on the type of table it is, probably there was a machine that was used to varnish or whatnot that wood for it to be this smooth. There's overheads on the table. This table was probably not done by the streets. Probably it was manufactured in a factory. So there are overheads. There's rental of that factory in this table. What else can I see from this table? Probably with the vanishing, with the cutting of that wood, I needed electricity. They needed electricity to manufacture this table. So do you guys see how many costs I can identify from one product? I didn't say whether it was work in progress. What I'm saying is, what do I see? A cost object. It's anything where I can trace activities or anything that happened which was cost intensive, if I'm not intensive, but cost was applied, cost was incurred on it. So next time when I ask you again what a cost object is, cost object, it's an item where I can trace cost, activity of cost. So an example for layman's term, when I was saying explain it to a child, the saying in layman's term, don't give me textbook ones, but just give me, say, an example is a table, a phone. That's why sometimes I'd say, and give an example of saying that a table that is bought directly from the factory, it's usually cheaper than a table that you buy at the store. What would be the difference in that? What cost are different from when I buy it from a factory than when I buy it from a shop? What other cost do you think would make the one from the shop to be higher? What do you guys see? What cost do you guys see, or can you think of, that makes the cost of a table from Craft factory to be different from a table from Craft at a mall?
I can say a transport cost from the factory to the store.
Good one. Another cost, additional cost that you see from, hey, how come when I go to a factory it's cheaper than when I go to the mall? What would make the one at the mall to be higher? So I identified that it needs to be moved from the factory to the mall. So they're gonna charge you that cost, trust me. What else do you guys see? It's additional.
The staff to carry the product, salaries of those staff.
Yeah, so I'd say the staff is the people who are working inside the mall, right? Who are saying,
Yes.
can I help you? Which table are you interested in? Do you like this one? Okay, let's go to the till. And all of those things are cost. Another one that's like obvious. What other one is so evident? At the mall, Choreograph pays rent, guys. So over and above the rent that they pay at the factory, you being at a mall, any shop at the mall, they pay rent for that space. So there's rent. And Choreograph, when you get in, are they using lights or are they using candles? They're using lights, so that means there's electricity. So do you guys see, and the person that you're talking about is the sales rep, right? Because they are selling this table to you. So they're going to need a commission from that sale. So what I'm trying to say is try visualize the concepts that we learn from our learning units and make it as practical as possible to your life and what you see, because it's easier for you to understand. So out of this discussion, if I say, what is a cost object? You'll be able to pinpoint what's a cost object and justify why you say it's a cost object. Are we all together? Now, learning unit 2 helps you define what those costs are, specify those costs. So I'll still use the table, sort of for using the brand, but Kurka, or it could be anything. But I'm just gonna stick to the example of Kurka. Say we'll continue to define costs that we speak about. At the moment, we're just speaking of random costs that we can, but we will need to learn how to define those costs and classify them. So part of defining your cost means being able to say that the costs that are assigned, that I can trace from this table, these costs are direct costs and these costs are indirect costs. That's how you will be able to define your cost. Then when it comes to classifying your cost, you need to look at the nature of that cost, its origin. When we say nature, we say origin. So we classify costs according to its origin. Were they manufacturing costs or are they non-manufacturing costs? If they are manufacturing costs, let me use a laser point. So origin, are they manufacturing costs or are they non-manufacturing costs? If they are manufacturing, are they direct material? I remember, is it I said raw material. Are they direct material? Are they direct labor? Are they manufacturing overheads? We are classifying after defining. Another factor or pillar of classifying is how do they behave? Are they in a fixed way or are they in a variable way or semi-variable or semi-fixed? What does it mean? Right? Part of classifying is, are they product or period cost? These elements, as much as you might say this is theory, very, very critical as part of your basics. Because why? It will catch on, guys. It will catch on when you are doing your direct and absorption costing. It will catch on when you are doing your process costing, when you're doing your standard costing. They catch on. So before we head there, let's make sure we get the basics right and you guys understand. Right? So how you answer the question of cost object, you have to say it's the cost of what. So the object is the what? It's the cost of the table, it's the cost of the sofa, it's the cost of the laptop, it's the cost of, I can mention so many things. Cleaning services that you have. It's just like I work at a bank, I always say, the minute you enter into the branch, just know we are charging you. The minute you enter that branch, just know every single thing that you use within that branch, it's a cost. You're going to pay for it. Because having a branch in itself, you are paying space of that branch, the rental, the electricity, the staff people who greet you and ask you, what are you here for? We are charging you for that. That cost ticketing, when you get there, they say, specify why are you here? I want to deposit or I want to change beneficiaries. Trust me, we are charging you for that. The minute you pull that chair, the chair, where do you think the chair is coming from? We want to charge you for that chair. You sit down, you speak to someone, they use a system, we are charged. So every single thing that you touch, whether it's in the doctor's office or it's in a branch of a bank, know that there are costs attached to every single object. This object could be a product or a service. I was just making an example of a service when I was speaking about a bank. So even with your business or wherever you will work, you will start identifying costs as you go. That's something about management accounting. You'll start seeing things. It's just like auditing. You'll start seeing controls wherever you go. So management accounting, you'll start seeing costs. You'll start seeing why are certain things charged the way they are. When they have sales, what, because they all use the same principles that you are learning here. So it's fun times. And then, so we defined what the cost is in terms of what's a cost object and how can you trace it. And we know classifying the costs. Sorry about that. Using a laser sometimes. So cost classifications, you ask yourself, what are my total operating costs? So total operating costs made up of manufacturing and non-manufacturing. So what I'm posing it to you, what is a manufacturing cost? What comes to your mind when I say, what's the difference between manufacturing and non-manufacturing? I'm posing it to you again. Brenda says storage or rental. So what is storage and rental? Or was this the old question that you are answering? Because I'm just looking at the time. What would you say is a manufacturing cost and what's a non-manufacturing cost?
I would say manufacturing costs are the costs that are directly related to the manufacturing of a product, and non-manufacturing, like, okay, I need to give examples as well, right?
Yeah, you have to, because you can't define a thing by mentioning the thing. So you can't say manufacturing costs are costs for manufacturing. You just did it inverse. You can't say defining a thing by using the word. So
Okay,
make
I'll
it
say
simple.
in the example of a table that you have given, the manufacturing cost will be like your, maybe the what do you call it, the wood that you use, and the non-manufacturing will be the lights that provide lighting to that area where the people are working.
Nice one. Right? Any other input of what a manufacturing and non-manufacturing, what's the difference between the two? Nicely done, Brenda. What would you say is the difference between a manufacturing and from the example that Brenda gave us, she said that manufacturing would be the wood of the table, and then non-manufacturing would be the lights where the table is being assembled, for example. So why would you say that the lights are not manufacturing costs, guys?
Because the lights are not directly linked to the table. That's why they are the non-manufacturing costs.
Okay, cool. So go back. Thank you for participating, guys. So yes, manufacturing, these are your production costs. What it costs us to produce this table with a part of production, right? So, sorry. Direct material, direct labor, direct your overheads, they are part of your manufacturing. But non-manufacturing costs, these are costs that are outside that you incur once the products are completed. So let's say once this table production is done, I can see the table is done. Any other cost over and above that, those are your non-manufacturing costs. So for example, this table needs to be marketed so that we can make sales. So your marketing costs are your non-manufacturing costs. So selling and distribution, those are your non-manufacturing costs. Your admin costs, so the people who are working, so your finance manager who works for this manufacturing company, it's admin. So your admin costs, those are your non-manufacturing because they are outside the table being completed altogether. So actually, what you guys are mentioning is so manufacturing cost, you have your direct material. So those are your wood, the wood that you mentioned there. Direct labor is the person who is involved in making this table. So when you add these two, these are your prime cost. Please make sure you know this. It's very important. These are your prime cost. Then there's manufacturing overheads. These are your indirect costs. So this is where your electricity comes into play. So electricity is still part of manufacturing costs, guys. And manufacturing, these are the costs that you incur once the product is complete. It's outside production. So it's marketing, it's admin, anything that you use to control the organization. That's what I'm saying. Your HR people, payroll, all those admin, finance people, anything outside, those are your non-manufacturing. But manufacturing, there's direct and there's still indirect. So the indirect part, there's indirect material, there's indirect labor, there's overheads. These overheads are the electricity that you speak, but they still fall under manufacturing. When you add your overheads and your direct labor, you have your conversion cost. Know it, why? You will see it in process costing. Conversion cost, think of it of saying that, fine, I have my raw material, but what do I need to do to change this thing into my final product? So in terms of your table that we're talking about, I will need labor to transform this wood into a table. I will need a certain machine for it to cut this wood into a certain shape that I want this table to be in. I need a machine or a person to take nails. There's nails that are involved. Nails to assemble and make sure that this table looks the way it is. I need a labor, a machine to varnish this table. So those are conversion. You're converting this wood into a table. Are we all together? So I hope you understand, because this will be part of your process. So overall, what are manufacturing costs? your manufacturing costs are your direct material, direct labor, and manufacturing overheads. What are my manufacturing overheads? These are my indirect costs that are not directly linked to the production, but they are part of the production. They are not over and above my production. Any questions before we move here? And your non-manufacturing, these are the costs that are incurred once the table is completed. So selling and distribution, how will you now transport this table to shops? How would people know about your table? You need to advertise. People who were working over and above just to make sure that this company is working well. You still need your finance people, you still need admin people, you need procurement, you need all those departments, they fall under non-manufacturing. Simple, ne? Know it. Catches on. Next concept is saying that how then do we classify? So we classified cost according to their nature, their origin. We are now looking at how do our costs behave, right? So I ask it to you, how would you say costs behave? Explain it to me as if I don't understand or know anything about that. So how do costs behave? Posing it to you.
Like the more you are manufacturing the tables, is the more you are going to incur the cost.
Can you repeat that again? Sorry, I missed that.
Okay, like for example, if you are making 10 tables, right? So the more you are manufacturing those tables, is the more you are going to incur the cost. So
What types? Yeah. So how do those costs? How would you say they behave? Like, yeah, give me an example.
Like for example, you will have to buy more raw material. Like for example,
the more tables that you have, the more wood you need to buy.
Yes.
Right?
Yes.
So what type of cost is that one? How would you classify the cost between fixed and variable? How do you classify that cost?
It's the variable cost.
It's a variable cost because the variable cost means that it changes according to the product, the number of products that you produce. So, in simple terms, the more tables that you produce, it's the more raw material you need. All right, so those are variable costs. And then how do costs also behave besides changing according to the number of products? Which other costs are there and how do they behave? Which other costs are there, guys?
The fixed cost. Fixed.
Yes. Give me an example. What does fixed mean? Remember, explain it as if I don't understand. What does fixed mean? Like, what do you mean?
Okay, I would say they don't change with the level of activity. Instead, they would remain constant. An example would be like your rental.
Yes. So rental, perfect example. Rental doesn't care if you produced anything. So you could have produced for this month 50 tables. They don't care. You need to pay rent. If it's 5,000 per month, it is what it is. You need to pay 5,000. Regardless of how many tables you sold that month, whether you were able to cover that cost or not, rent is due. Cost, it's constant, it's the same. So rental is a perfect example of a fixed cost. Okay, so thanks for the participation. Yeah, so fixed costs, they remain constant regardless of changing activity. So we made an example, regardless of the tables, how many did you sell, how many did you produce, fixed stays the same, regardless of that. So it's fixed, so it will be here, it just goes this way. Constant, it's independent from the level of activity that's happening. So that's a lot of English, but it's saying that it stays the same regardless of the number of or how many sales rent is due. So think of rent when you cost. Another example would be, let's say, with salary, a table, you would see it with salaries that your salary stays the same month on month if you are a permanent employee. You get paid however it is every single month, regardless whether the company is making profit or not, you are getting paid same amount that they agreed on for that year. That's what they pay for that year. You don't care about the fact and to say that there was COVID, sales drop, all of those things. Some companies during COVID, they still maintained and paid people their salaries, right? So I'm just giving an example so that you understand when we say that regardless of the activity, change in activity, you are getting paid. On the other hand, the companies, that's why you've seen that during COVID, sadly, most companies went down. They had to off. You'd go to a mall, you were thinking you're going to a certain shop and you find that it's closed. Why? Because they couldn't keep up with the rent. Because regardless of COVID, that mall needs their rent paid. If not, you move out. Just sad. But some companies, regardless of COVID, you find that they're no longer making sales. So I'll make an example of Nokia, just remember, or your Blueberry, remember, they got outed by technology, right? You guys are now using Android phones, but there was a time where everyone was using a BlackBerry. And what happened? Sales were no longer there. They still produced BlackBerry, but there was no one buying those things. So as a result, what happens? They can't pay rent. They can't pay rent of where their phones are now being sold. And as a result, the company went over because the fixed cost, they were over the sales that they made. So I'm making you an example so that it just hits home as to how customers behave. Sometimes they have a major impact on your profit, eh? But anyway, we'll get into that as we go. Variable, on the other hand, they vary with the activity. The more tables you produce, the more raw material you making an example. So that raw material. So the cost increases as the activity. If the activity declines, the cost declines. Okay. Right. So what would you say is a semi-fixed cost? I did say tutorials, more of you talking. than me, so that we all get to learn together. So what would you say is a semi-variable or a semi-fixed?
I've got again.
Yeah.
I'd say that they have both an element of fixed and variable costs.
Yes, they have both elements of a fixed and a variable. Can you think of an example of a cost that has a bit of variable? It doesn't have to be to the table, but what can you think of a cost that is semi-variable? So it has a bit of a fixed portion and also a variable portion. Can you guys think of anything? Doesn't have to be to a table. Any product or service that has a bit of fixed and a bit of variable.
Electricity again.
Okay, how come?
I would say if you are in a prepaid and when you are on a fixed billing.
Okay, so so you're saying that in an instance where, Kathy, you've got your hand up, you can speak.
Petrol cost, the levy on the petrol and the variable as it changes per period.
Oh, that's a nice one. That's a nice one. That's a good one. And also another one could be, I always say, I used to say time, phone contracts. So phone contract, they'll tell you that when you enter into this contract, the airtime that we give you, it's value of 250 Rand per month. And the data bundles that we give you, it's let's say 1 gig per month or 2 gigs per month. Anything over and above the 250 airtime, it's a variable cost that you give. Because it will be based on your consumption, right? Consumption meaning the number of phone calls that you will be making over and above the 250. They will bill you for that. And then you find that with the data also, anything above 2 gig, the more you go on WhatsApp, you go on Instagram, on above that 2 gig, they will charge you. So they'll have a fixed fee to say that to give you this 250 airtime and the 2 gig per month, you will pay 100 Rand, right? But anything above those restricted areas, that range, if you go over and above, what happens? You'll need to pay based on your consumption. So I like that one, petrol. So yeah. So I hope you guys understand what is a semi-fixed, semi-variable, sorry. So semi-variable cost includes the fixed amount, as I've mentioned. There's a fixed amount within a relevant range. I told you about the range that I was telling you about, that 250 airtime, between 0 and 250 Rand airtime, you'll be paying us 100 Rand per month. But anything above that range, you'll have to pay according to range. So here's an example. It stays the same, but then the minute it changes range, it goes with the level of activity. A semi-fixed, though, in this instance, it jumps as it goes. So it increases in incremental steps. So I'd say, so the cost remains the same, independent to activity, until the capacity it changes. So let's say inside a factory, right? You'll have a factory and they'll say We charge you rental of 4.5 per month when you use the space. But the minute you now need additional space, you are now outside this contract that we entered into. We need to now include this additional space that we use, and now it changes your fixed. No longer 4.5, it's now 5.5 because you asked for more space. Most factories do that. For instance, you now need to also think about the semi-fixed when it comes to, as you go, you'll remember this. When you do relevant costing or decision making, there's a special order, a special tender that the company needs to add in. But now their capacity, meaning the space that they have, can only work with 1,000 units being produced within this space, within this machine. But then now this special order comes in as a tender. It's over and above the capacity that you have. So what do? It's either you sacrifice the product that you've been making within your capacity, or you go ask for more space, and it changes your fixed cost. So the question would be, should you sacrifice your cost or should you get more space? And after more space, sometimes what happens is that you'll be only using it for that period. So you have to think, is it worth it or is it not? If I sacrifice my product, what would my customers now think of me? Because I've changed things. So decision makings come into play. All right. Understood? I hope it has. So we've covered cost definition. We've covered cost classification. Now we're getting into how do you estimate how do you identify these cost estimation techniques. They help you identify the semi-fixed, semi-variable, semi-variable, where there's a fixed element and there's a variable element. So the most popular one, we'll just look at the linear equation. This one, it's in your book, so you'll see it. It's a cost equation. It says y is equal to a plus bx. Your y is your total cost. Your a is your fixed cost, and your b is your variable cost, and the x is the activity level. You use this equation normally after you have determined your after you've determined what's variable, then you can work out your fixed. Okay, what do I mean by that? There's the high-low method. So the high-low method, are you guys familiar with it, or is it the first time that you hear about it? Let me ask. What do we use the high-low method for? What do you understand about the high-low method? Okay, so a high-low method normally is used to identify your variable cost within a semi-variable situation. So in this instance, you'd find that they will give you multiple costs, and then tell you that very difficult for them to identify which one is fixed and which one is not. So you use a high-low method whereby you now have to identify your variable cost per unit, because there's that formula that we spoke about earlier. So you will take the difference between your cost, the one that is the highest and the one that is the lowest. So they'll give you a range of, let's say your cost is 100 Rand, there's 50, there's 40, there's 20, right? This would be your cost, and then on the other side, this would be your volumes, whereby according to that 100 Rand that they spent, this is the amount of units that they have. Maybe let me try see here. So just do this, just okay, so that you can visualize. So this would be, sorry, I'm writing with my mouse. So this would be your cost. This would be your volumes, right? Because I can't find a good example. So under your cost, you have, let's say, 1,000. This 1,000 rand goes along with 100 volumes. So for you to produce this 100 units, you'd spend 1,000. Then let's say your next cost is 500, and then the cost here is, the volumes, it's 50, and then your other cost, let's say it's 200, and then the cost here is 20, the volumes, and then the last cost is 100 rand, and then your cost, your volumes are 10. So with the high-low method, they give you this, you have your cost and your volume. You can't determine, you don't know whether this 1,000, they tell you that it's semi-variable. So there's the fixed portion, and then there's the variable portion, right? So as we all know, we are trying to classify our costs because it's important when it comes to direct and absorption costing. So high-low method will help you to split this cost into what's variable and what's fixed. So when you apply the method, you'll take the difference between the cost, say which one is the highest with the highest activity. So you'll say my 1,000, say 1,000. And then which one is the lowest with the lowest activity? It's 100 rand. So you'll say 100 rand. Yeah. All right. Divide by the difference between the activity itself. So this 1,000 goes with this 100. So it will be 100 here minus, which one is the lowest activity? It's 10. So it's 10 here. What is my variable cost? Because we're trying to determine my variable cost per unit. Yeah? So it will be 1,000 minus 100 is 900. Right? 100 over, 100 minus 10 is how much? 90. So what's 900 divided by 90, guys? Hello? Just want to see if you guys are awake. What's 900 over 90, guys?
It's 10.
It's 10.
Yes. So now that means that my variable cost is 10 rand per unit. My variable cost. And then inside the question, so you've determined that, you still need to know what's my fixed portion, right? So they will tell you in the question. We're now getting into that thing, the y is equals to a plus bx, right? And on this linear equation, my b is my variable cost, and I just determined it, right? It's the 10 rand. And then my a, this is your fixed cost. That's what I'm trying to determine. Then my y, it's my total cost. So in the question, you would be given what's your total cost. So I'll just make an example, and not to say it's this one. So let's say if in the question, your total cost, because now we're trying to get FC, this fixed cost, which is your A. So this is now being otherwise. This is my A. We're trying to find this A. So you'll say A is equals to, what is my total cost? So we'll say total cost is the 1,000. I'm making an example. They will tell you what's the total cost. You'll say 1,000. Then you minus what you just found there, which is 10 rand. And then the units that they give you, let's say they give you 25 units. I'm making an example. These are the units. So your fixed cost would be 1,000 minus what's 10 times 25? Checking if you guys are awake. Please check what's 10 times 25?
It's 250.
90. So it's 250. And what's 1,000 minus 250? Guys, come on.
750.
750.
Yes. So in this instance, 750. So in this instance, what we just did is solve this. We solved this. We solved semi-variable. So in this instance, our semi-variable that we're working with was 1,000. But we had to determine what's the fixed portion, what's the fixed option. And you solve it by using this. So you start by saying, let me find my B. My B, I find it via using my high-low method. High-low method, I take my, you'll see the cost. Here the cost, here the volumes. Let me solve it. Do this equation. Then thereafter, you're like, okay, what's my X? They'll tell you what the X is at that moment, just the 25. So what's my Y? I have my total cost, which is the semi-variable, is the 1,000. So I have 1, 2, 3. What am I left with? The A. So let me solve for the A. You do the calc, you get that the A is 750. So now you know the split between that 1,000 to say that fixed variable is 250. And then my fixed variable is, my fixed cost, sorry guys, it's 750. This helps you with when you're doing your direct work. Because you need to know where your fixed costs are. Are there any questions when it comes to high-low method? Straightforward, no? CVP. So cost volume profit, no? It's an analysis technique that we use. So remember when we were talking about fixed cost, that fixed cost can pose as a they are sufficient. It's just that we are not sure as to do we break even or not. For CVP, it's mostly on do we break even on, or what is our margin of safety? How far off are we from making loss, and how are we in a situation where we are making sales? So we are on a good margin of safety, we are safe. And what is our contribution and also target profit? So CVP, think of it as saying that how far off am I from breaking even? How far off am I from making sales? And what profit am I making? Can I make a target as to saying that if I sell this amount of units, I'll be able to make a profit, given the fact that I'll be able to cover my costs, both variable and fixed. Okay. Then another important thing is, what is my contribution? Contribution means sales covering your variable cost. Okay. It's contribution. Okay, there's assumptions, but there's contribution, break even, and also target profit. So CVP, as I've mentioned, it investigates changes in your profit. What comes to your mind as to what could change your profit? Let's think about what elements could change your profit, guys.
It could be the level of activity within the organization in terms of the product produced, the product sold, and also their selling price. If maybe they decide to decrease their selling price based on the customer behavior, and also in terms of their affordability.
Yes. Good elements. So sales, how you strategize in terms of what your selling price can be. Sales in terms of customer behavior. Is your product in demand or not? The level of activity, how much do you actually produce and also how much do you actually sell? So also the costs, right? All of these things and also cost of saying that when you change what you produce and sell, what are the implications of cost, of my variable cost, of my fixed cost? It's those elements that you need to take into account when you are doing your CVP. You need to think like that to say, what could change my profit? If I change how I produce and sell, that will definitely affect my profit. So that's volume. Selling price, how much am I selling to these people? What's their appetite? Can they afford what I'm selling or not? And the costs, variable cost, obviously, and the fixed costs. Okay. So CVP has certain assumptions. The assumptions are that selling price per unit is constant. So it doesn't change depending on the sales volume. Those are some of the assumptions that they have here. And also, all sales are divided accurately, meaning you can see a variable cost and you can see a fixed cost. So you won't do CVP where they ask you to determine, you are working with the semi-variable cost, where now out of the blue, you have to calculate which one is variable or fixed. No, it will be given to you. So there will be a good distinction of saying this is variable, this is cost. Your variable costs are constant per unit within a relevant range, meaning because they won't be out of the blue, there's price increase and no. Whatever price that you pay for your wood, that would stay the same. No, yeah, so those are the assumptions. So contribution, nice one to think of. So contribution, the formula is sales minus variable cost. And these variable costs are total variable costs. Very, very important that you are aware of that. That it is total. Total meaning both direct, indirect, as well as your non-manufacturing costs, those selling and distribution costs that are variable in nature, that will form as part of your contribution calculation. Sales minus total variable cost. I mentioned this, I highlighted because people make a mistake of calculating contribution saying sales minus variable cost, but they only take into account their manufacturing direct and indirect, but no, you must also add also your non-manufacturing variable cost, which in this instance would be your selling and distribution cost. Okay. So this is like one way of calculating your contribution. There's also another way, which is contribution ratio. The contribution ratio is your contribution over your sales multiplied by percentage. Okay, so it indicates the percentage of sales that are available to cover your fixed cost. Right? So that's something to note. And that's contribution. So another formula that you need to be alert of, it's your break-even point. So break-even point is where your total contribution, what we just mentioned here, your sales minus your variable cost, are equal to your fixed cost, meaning there's no profit. When they say we're breaking even, we meaning there's no profit that we experience, neither is there a loss. So your sales minus your variable, your contribution minus, I mean, it's equivalent to your fixed cost, meaning when you take that contribution, you minus the fixed overhead, it's equals to 0. No profit, no loss. Which sometimes for certain companies, it takes years to get there to break even. Because after you break even, most of the time you end up making profit. Okay. Okay. So you calculate break even. So there's break even. There's two methods also to note. There's break even in units, and there's break even in value. Okay. How do you calculate it? You say total fixed cost over contribution per unit. This will give you the units that you need in order for you to break even. So it's the minimum number of units that you need to sell for you to be able to cover your rent. Okay? So it's the minimum number of units that you need to sell in order to cover your fixed cost. So you won't make a loss. So it's break-even units. Then there's break-even value. This is your sales value, the sales value that you need to make out of your break-even units in order to cover your fixed cost. So this is the value, it's the amount, the rent amount. This is volumes. This is volumes. Volume, number of units, quantity. This is value. This is a rent amount. It's a rent amount. Ne? So break-even value, it is break-even units multiplied by your selling price. Very important that you know that it's the break-even units, meaning what you just calculated above there, here, the volume that you need to sell, and you multiply it by your selling price per unit, you get your break-even value. Another way of getting break-even value is taking your total fixed cost divided by your contribution ratio. Let's do question activity 5.3 in your learning model. You can now see the activity. Now it's activity 5.3. I think let's do activity 5.3. If you guys have your module, that would be nice. It's learning unit 5. It's learning unit 5. 5.3. Okay, so let's do activity 5.3. Oh, let me choose this one. Sorry about that, guys. So question 1. Consider the following statements and indicate whether they are true or false. Ne? So I need your participation here. Okay. So the volume of output which causes fixed cost to be equal in amount to total revenue, it's called break-even point. So I repeat, the volume output, the output of volumes which causes fixed cost to be equal to your total revenue is called break-even point. Is it true or false? Hello? We're doing 1.1. The volume of output which causes fixed cost to be equal to your revenue is called break-even point. Is it true or false?
False.
Okay, it's false. And why? Yeah. What is the break-even point? If this is not the break-even point, what is the break-even point? Come on, we are almost there, guys. If this is false, then what is the break-even point? Because now you have to correct to say it is false because break-even point is
The break-even point is where the contribution is equal to the fixed cost.
awesome. Great. So I'm good. And then another question. At the break-even point, total fixed cost will always be equal to the total contribution margin. True or false?
It's true.
True, right? It's what you just explained. Yes. And then last question. If the contribution of the ratio
False.
if the contribution sales ratio increases, the break-even point will be true or false?
True.
False.
Heaven, false. Why? What false? Why?
No, I was just analyzing the question, sorry.
Okay, let's see what they say. So it is false. Why? It will decrease. An increase in the ratio will mean a larger contribution is available to fixed cost. Hence, the break-even point will be lower. Do you guys understand that one? So if your sales contribution increase, your break-even point will be lower because that means that you will be able to cover your fixed cost with that large contribution. Meaning, if your sales increase, your variable sales will also increase, right? So if they do increase, that means that there's a larger portion of our contribution that is available to cover our fixed costs. So as a result, our break even will be lower. I don't know if you guys understand. So if my contribution is 500 and my fixed cost is 100 rand, let's do the math. So 500 divided by 100 rand, it gives me 5. So that means that for us to break even, I need 5 units. So let's say now my ratio, Kunja, how do you calculate the ratio, guys? How do you calculate the contribution ratio? I'm speaking alone here.
Its contributions divided by sales times 100.
Yeah, so that 500, when you divide it by, let's say your sales are 1,000, it's 50%. So now we're saying we're increasing this contribution ratio from 50% to 60%. It means that at least 60% of my sales will be able to cover my fixed costs. So if that's a result of saying that 60% of my sales, we were on 50, now it's on 60, that means that there's a 10% more that is available to cover my fixed costs. So that means that my break-even point will be lower. I don't have to now, that means that there's a chance of me making profit. I hope I'm making sense. But if I'm not, we'll try look at an example during the week just to illustrate what I'm saying, that if contribution to sales ratio increases, your breaking point will be less. It will be lower. It will decrease. Because now you have more contribution available to cover your fixed costs. So meaning you have higher chance of now making profit, because initially you were able to cover your break-even point. So if you make more, that means that now, if you make more contribution, that means that now you'll be able to still cover your fixed cost and still make a profit. Hence, your break-even point will be lower. I hope that makes sense. Okay. I wanted to do a calc, but I'm looking at the time. We've got 10 minutes. Okay. I think we can do it in 10 minutes. Yeah, let's do this one. So J company has total fixed cost of 150,000. Their variable cost per unit is 500 and a break-even point is 1,000 units. What is the contribution per unit? Now this is maths. Let's work backwards to finding contribution per unit. I'm giving you 5 minutes to do it quickly. It should actually take you 4. Let's do it. For 4 minutes, I'm giving you to calculate the contribution per unit. Is it 600? Is it 500? Or is it 150? Or is it 0? Can you try calculate the contribution per unit? You have your total cost, your total fixed cost, you've got your variable cost per unit, and you've got your break-even units for 1,000. Calculate the contribution per unit for me. 5 minutes max. I'm going to keep quiet and give you the 5 minutes to give me the contribution per unit, and you let me know how you got to it. Then we close off the session for today.
150,000 rands divided by 1,000 units.
So you are right, it's C. So how did they do it? So contribution, it is selling price minus your cost. Can you guys see my solution? I hope you can. Show it again. Let me show it again. Okay, cool. So selling price is, contribution is your selling price minus your variable cost. And your break even, it is fixed cost over this selling price minus, which is your contribution. So we have, what do we have? We've got the break even units, which is 1,000 units. And we've got the fixed cost being the 150,000, but we don't have the selling price. And we have the variable cost, which was 500 per unit. So you use algebra. What you do on the left-hand side is what you do on the right. So you take 1,000, you multiply it by what you're trying to solve, right? Which is SP minus 500. You say 150 divided by SP 100 multiplied by SP 500. So not 100, 500. So you kill the 2. As a result, you are left with selling price minus your 500. And here it is on the side, 150 divided by 1,000. So this is a long story, but short. At the end of the day, your answer is 150. That's how you get it. You use algebra. We covered a lot. We did the basics of unit 1, which was what was management about. And we covered cost definition. We've covered cost classify, how you classify your cost, looking at manufacturing, non-manufacturing, semi-variable, semi-fixed. We looked at how to determine your costs if you have a semi-variable by using the high-low method. And then we now looked at CVP just to say what would change our profit. When do I actually break even? and what is a contribution margin and ratio. So that was today. So we covered quite a lot. I would say that if you can, just do the homework that I give you would be doing unit 5.5, which is inside your module. So please do question 5.5, which is inside your module, all of it. Do question 1, do question 2, and question 3. Just to practice so that you can just get a hang of things, of how to do the CVP. So just do question, what's this? Activity 5.5. Then after doing activity 5.5, you can then go to question 5, which is within your thing, your activity module. It's inside unit. So unit what? This is unit. Sorry, I just want to check. This is unit CVP's unit 4, I think. Yeah, so just do that. I'll put it in our WhatsApp group just to say what you need to do. It's unit 5. I'll tell you what the homework is, but just go practice so that you get used to how to think on your feet and quick. Okay. Thank you for attending the class.